Seasoned greetings to everyone present and those who are joining us online, whether it be via the VM Wealth YouTube channel or the VM Group Facebook page. Welcome to the investor briefing. We're really happy to have you here. This is a huge transaction for VM Wealth, and we're excited to include you in the journey. We're giving you an opportunity to create wealth, while at the same time we're also improving our ability to take advantage of financial opportunities to generate substantial returns for investors. At today's investor briefing, I have with me Mr. Reswell Burchinson, the CEO of VM Investments Limited, and Dwight Jackson, the Assistant Vice President of Capital Markets. Both gentlemen will walk you through details of the offer, the selling points of participating in this transaction, and will guide you through the risk as well as the opportunities that this investment opportunity has for you. At the end of the presentation, we will open the segment to questions and answers, where we'll invite you to share some of the questions that you might have about this transaction. If you're uncomfortable sharing those questions via on this platform, you are free to send us an email where you can send these questions to wealthinfo@myvmgroup.com or contact one of our wealth advisors. With that said, I will now open the floor to Mr. Reswell Burchinson, who will walk you through the journey that VM has taken over the years, and we are intends to take the company in the future.
All right. Thank you very much, Mario. First, let me thank all our online participants for joining us this afternoon as we shed some light on our 5.4 public offer of bonds. Quite sure that we have online potential investors, shareholders, regulators, board members, members of the team. As Omar would have intimated, we view this opportunity as one that is very exciting, and the team will, throughout this presentation, highlight the deal merits. My presentation is simply to go through VM Investments Limited as a company, what we've been doing to highlight the fact that we are part of the strong VM group, and take you through some financial metrics. I know a number of members of the analyst community is going to be on, wanting to deep dive into the numbers. But at the end of the day, our objective is to ensure that all potential investors see this as a very exciting opportunity and participate in a major way. So thanks again. So I'm not going to shed some light on the opportunity per se. We do know that we're trying to raise 5.4 billion across 3 tranches. I'm going to leave some of those finer details to Dwight, who will elaborate on the tranches, the interest rate structure, use of proceeds, etc. And then he'll also take you through some of the deal merits. Obviously, the VM brand is a very strong brand in the group, but again, I'll allow Mr. Jackson to elaborate accordingly. Just to situate VM Investments within the wider VM group, we are a subsidiary under the VM Financial Holding Company. First of all, you have the group. A number of us would have known it as VMBS, but we had a BOG approved restructuring last year, court approved restructuring, and we're now the VM group. We are under the financial group. Based on what we do, under the financial group are all the regulated entities, VMBS, VM Investments. Right below VM Investments is VM Wealth Management, and you have all the other amazing subsidiaries in the group: Money Transfer, VM Finance, VM Overseas, VM Pensions, and of course, the investing public would have known that we are own a major stake in BCIC. And then on the non-financial side, we have the foundation, VM Innovations, Property Services Arm, and our real estate holdings. And as you can see, when you look at the pictorial, is that certainly we want to be a one-stop shop for taking persons on their journey toward financial independence, whether it be a pension plan, a savings account, a unit trust. That is the aspiration of the VM group. Some important points to note about the group. Obviously, few months ago, we did a major raise, $11 billion. In terms of the revenue structure, close to $11 billion. We are known across the group for mortgages, but certainly we're changing that profile because we are much more stronger, integrated financial group, offering a wide range of services. We cater to close to 400,000 Jamaicans, whether it be Jamaicans and Bajans, forgive me. Important plug to catch, whether they be in the Caribbean or in North America and throughout the diaspora. So we're very proud about that. And of course, part of our mandate as a responsible entity is ensure that we are impactful in all we do. And certainly on our foundation, we track some of these major metrics. We have started on a journey, massive digital transformation journey. Just want to major plug for the group. A number of us, because we've been around for 145 years, we really want to be relevant to our customers. We really want to provide superior customer experience to our customers across all our SBUs. And with that said, we're showing the number of our members who are transacting digitally, major pillar for the group in terms of growth. Number of performance highlights in terms of transactions across the group. The VM money transfer business is a major player in the space. VM Finance specialized in the UK, making major inroads. Under VM Investments, we hold a stake in Kingston Properties, which is listed, and I already spoke about the stake in British Caribbean Insurance Company. In terms of the composition of the revenue structure of the group, it says it here in terms of what is comprised between the net interest income and other fees, and of course, a part of the diversification efforts of the group is to ensure that the revenue structure is adequately diversified. Some stats on the performance of the group over the years. I won't get much into this. We actually will leave this on the site for persons to get into, but certainly it shows how we're accelerating the growth, whether it be in total assets, whether it be in net interest income, but certainly you can see at a glance that we're on a path to really move the needle in terms of performance for the organization. For a regulated entity such as ours, we obviously have to track our capital ratios vis-a-vis the regulatory benchmark, and as you can see here, for all the measures we are above the regulatory benchmarks. This is another one to the minimum capital under Basel 1 and Basel 3, doing well there. Minimum capital again we're doing quite strong performance of the group. And obviously, let me reiterate that capitalization is important because we're a financial organization, and obviously surpassing all the regulatory requirements certainly would be most important for us also. Under VM Investments Limited, so VM Investments Limited is the entity which is refinancing this bond. We have the subsidiaries, VM Wealth Management, which is the known broker-dealer. In the broker-dealer, we do asset management, we do capital markets, we do treasury, and we have a very strong trading team. Just this year, we acquired VM Wealth Funds Barbados, which is why I caught myself earlier, that we're now a Caribbean player. We do have a stake in Actos, which is a private equity vehicle that's trying to make inroads in terms of helping SMEs to self-actualize and to grow. We all know that the future of this country is dependent on the growth of the small and medium-sized enterprises. So we want to play a role in accelerating that segment of the space. We own a 23% stake in Kingston Properties, listed vehicle on the Jamaica Stock Exchange. And just recently, there was an article in terms of the diversification efforts of Kingston Properties. They have investments or property holdings in the Cayman Islands, in Jamaica, in North America, and a new frontier for Kingston Properties is the United Kingdom. We have made one investment, and as indicated at the last board meeting for Kingston Properties, that's going to be a major pillar of growth for that enterprise. As part of our PE efforts, so we have 3 PE pillars in the business on the slide. We have the Actors investment, but we also own a stake in Home Choice Enterprises. That's doing very well. And we also own a stake in Coldbridge Organics. That's the Mount Pleasant chocolate company, and it's also doing very well. So at a glance, you can see the operating entities of VM Investments Limited. So VM Investments Limited, we view ourselves as an investment holding company. With the capital that we have, we're deploying it across these businesses, existing businesses and new businesses, trying to raise the ROE for the entire enterprise. So whenever we go to market for investments such as these, is toward deploying same to accelerate our growth ambitions. VM Investments Limited, we're listed on Jamaica Stock Exchange. So, tracking our performance, there's utmost transparency in our performance. We're also rated by Caricris. Do I to elaborate same? And obviously, we are regulated. The broker dealer is regulated by the Financial Service Commission and the Jamaica Stock Exchange. I'm intimating some of it, but our purpose actually is to ensure that we are empowering Jamaicans to create, grow, and sustain their wealth. That's the core of what we're trying to achieve in this enterprise. Our mission, as stated, ensuring that empower members globally. We're not only a Jamaican player, we're in Barbados, and we have aspirations to expand our geographic reach, that through home ownership, leveraging our sister company VMBase, but offering innovative investment solutions, whether it be through our unit trust or our capital market structures, or structures that originate in other jurisdictions, offering these innovative solutions to Jamaica. And obviously, we want to be one of the leading Caribbean providers of financial services. Some of our core values: member focus, always directed by the dictates, if I may, Chair, of the members, but obviously operating with integrity, leveraging the competence of the team, being innovative, and always committed to excellence in all we do. Some history about VM Wealth Management. We started out as Alpha Financial Services, and over the years, we have done a number of transactions. We have launched up a real estate, we have brokered a real estate fund in 2011. 2016, at the time, we had the largest IPO, but lots of wins as we would have celebrated over the journey since our inception in 1994. We won't spend much time on this, but let's move on to the next. In terms of some of the transactions that were executed in our capital markets unit, on screen, well-recognized brands, Dollar IPO, which was world leading or Caribbean leading, still very proud of same. The leverage buyout for Island Car Rentals. So a number of transactions as we kind of leverage our capital markets unit. Very tough space, but we believe that we have a unique value proposition to offer to owners of enterprise that are seeking debt or equity to accelerate the growth of their business. In terms of the board of directors, so one thing that the analysts will look for in assessing the credit is, hey, where's the governance in the organization? How robust is same? We're very, very proud that we have a very strong board that's led by the group chair, Mr. Mark Morris. And as you can see from the slide, that the relevant competencies are captured, whether it be accounting, marketing, strategy, M&A, entrepreneurship, regulatory, accounting, risk management. So a very strong board, a board in which we are very, very much so proud of. Those are the pictures of the members of the board. As you can go through, you can see that some of these members are steeped in investment banking or banking, legal services, would have run enterprises of this nature over the years. We have Philip on the slide, Sandra Shirley, Matthew, Janice, and Vikram. Again, if you take some time to review our website, you can see the profile of these members, but well-known, well-respected, well-recognized in the business community, and it's these members that certainly are guiding the providing counsel to management as we execute on our strategy. Must then pivot to an awesome management team, which I'm privileged to lead each and every day. Deputy CEO is Mr. Brian Fraser, lots of years of experience in the financial services. We have Ms. Alison Mays, operations guru, digital guru, lots of experience there. We have Dwight, who's on the panel with us, lots of years experience in the capital market space. Very proud of same. Carlene War in terms of operations, lots of years of experience in operations, whether it be in the building society, who came over to us recently. Very proud of this team. Yvette, who runs our treasury and asset management. Again, you can see the years of experience. Actually, we should add up all of these of experience. I think it may add to over 300. We have Nicole in terms of research, business planning, investor relations, and I may add CSR. Denise, who is head of our bond trading, equity trading, and she's proud to say digital asset trading. We have Christine Benjamin, who heads our sales and service, and again, seasoned professionals in every right. In terms of the financial performance of VM Investments Limited, you can see in terms of our operating revenue, very diversified. That was a deliberate attempt that we took many years ago to provide additional resilience to the business, moving away from treasury, adding asset management, adding capital markets, adding trading. As we grow the business, our next task is to accelerate our asset management thrust, but also to add diversification to the client base and the revenue base. And one such initiative was our initial forays into Barbados, and I'm quite sure there will be lots more to come in the future. In terms of our revenue performance, good cake over the years, moving from 1.6 up last year we're at 1.8. Very tough space, but 2024 we have seen a rebound in our financial performance. And in terms of our net PAT performance, our 2019 589, last year was a very tough year, but we're expecting a rebound, and as evidenced by our third quarter numbers through to the end of 2024. Again, this shows the movement in our total assets over the years, and of course, always moving to bolster our equity and our return on equity ratios. Debt to equity ratios, there was a lift recently, but obviously we're playing close to same, and our intention over the years to reduce our leverage ratios based on our improved performance. Capitalization ratios, capital adequacy ratios, as I mentioned, for the group, certainly well above the regulatory requirements, whether it be capital adequacy, capital to risk-weighted assets. So very pleased of that metric, which is tracked in the business in our ERM framework. A couple of things I want to talk about in terms of the space. Obviously, there are many risks in this business. Credit is one. which is why we pay attention to all of these risks in our ERM framework, whether it be credit, whether it be market risk, always paying keen attention to the operating environment, and always want to ensure that we have sufficient cash flow to grow a business, to capitalize on opportunities, to pay dividends to our shareholders, and to also, accelerate the growth of our business. So certainly some things that we track, which is why it's on the screen. We have identified these risks. We have obviously paying close attention to implementing the mitigants from the management perspective. So what's the future of VMIL? Obviously, we have annual strategic planning sessions, and two pillars are guiding our business for the medium term. The first pillar I want to focus is on the revenue pillar. We believe that the asset management space in the Caribbean has quite a bit of opportunities for VM Investments Limited. In the asset management space currently, we offer unit trust, we offer mutual funds, and we offer private portfolio management services. And obviously we want to accelerate those pillars, but also bring some innovation to the space. So that's one key pillar of ours. Within the asset management space also is also focused on regional diversification. Not only what's come from Jamaica, but from Barbados and other territories. We believe that we have a particular competence in asset management, from people, from our technology. We're putting in the processes, refining the processes, but we certainly want to leverage same as we grow our asset management business across the Caribbean. And then the other thing which is also very important when we look at our current client base and the future client base is ensuring that we implement what I call self-serve. A number of customers really are accustomed to a particular North American way of doing business, and we want to ensure that we offer our services and products in a way where will allow our clients to self-serve. Whether they want to buy a stock, they want to buy a bond, they want to subscribe to an IPO, they want to subscribe to a rights issue. And we are already on a path. We're leveraging the JSE JTrader platform. We have our IPO Edge, which is what persons are using to subscribe for this offer and future offers. We have our client management system, which is a one-stop shop for all your repository of information, for your statements, your goal tracking, your transactions, your coupon. And certainly, so we want to build on this pillar to implement self-serve. So these are the two pillars that we're going to leverage and speak about quite a bit more in the future when we talk about the future of VM Investments Limited. Again, just talking about the self-service pillar, we spoke about our CMS. We have WhatsApp for Business coming on board. Very excited about a platform which is being in pilot, which is a group online onboarding, where someone from anywhere on the face of the earth can open an account across the group, including VM Wealth Management. Very important about same. And there's lots of talk in the space about AI. The Business Society is already on that journey, and we are also on that path. And in a few months, we'll have some exciting news to share in terms of our execution of same. Again, spoke about the diversification efforts, regional expansion, diaspora thrust. We have some exciting plans for Barbados in terms of our operational efficiency, using, just improve the way we do business. A lot of that will come from a massive transformation effort that we have in the business and across the group around driving digital. And again, I spoke about the self-service portal. Some of the things that we are obviously, guiding us. We want to be the place to work for high performers. Talent is key in this business. We don't have any proprietary tech. We don't have any proprietary process. So the war for talent is on. We must have the ability to attract, develop, and retain top talent. Very important for us. I mean, I give the example in the business or other managers that, we're the Goldman Sachs of Northford Boulevard, and we want to be able to attract top talent from the requisite universities, much like how a Goldman Sachs would attract top talent in North America. The Caribbean space is open for expansion. We spoke about our asset management pillar. We have to focus on same. And even though we have started the journey in Barbados, I think there are going to be some exciting things that will come down the road, not necessarily in 2025, but we believe that there's a space for us to play in those jurisdictions. We certainly must provide excellent customer service just based on the nature of our business. Working on same, quite a bit of the digital initiative that we're embarking on is to provide that excellent customer service. And then this one, which is dear to my heart, provide a financial education. And if I may segue a bit, one of the reasons why we are in the predicament that we are as a country is that we individually do not make wise financial decisions. We don't understand asset allocation. And when VM was started in 1878, it was to provide a route for ordinary Jamaicans to become financially independent, and certainly VM Investments Limited and VM Wealth Management and across the group, we have to play that role. We have to continue to provide cutting-edge solutions, and obviously I'm going to put some challenge out to the capital markets team, and they've accepted it. Looking forward to seeing more asset management vehicles must be top performers, and of course that we're on a journey to improve our corporate governance standards, to improve our investor relations standards. Some of the advisors to the offer, so the wealth management team are the broker and the arranger, and we're privileged to have the team from PMH to be our attorneys, and then the team from the JCSD will be the registrar and trustees for the offer. With that said, I'm going to pause. I'm going to hand to Mr. Jackson, but I'm looking forward to the Q&A as Dwight take us through the offer. It's a very exciting offer. Not only is the offer competitively priced, but there's certain features that Dwight will elaborate on in his presentation that will make the offer even more compelling. So at this point, I'm going to pause and hand to Mr. Jackson, or back to the chairman.
All right, thank you for that, Mr. Resort Burchinson. That was a very comprehensive presentation. I think our CEO would have touched on the key areas as to why you should really invest in VMIL. One, we are backed by a very strong group, which has been around for years, one of the oldest financial institutions in Jamaica. Strong corporate governance based on the experience and the achievements of the members of our board of directors. We also have a very experienced management team. Our financial performance has been robust over the years. And the outlook for VMIL is very positive in the sense that we are venturing more into the alternative investment space. We are going into private equity. We are going into real estate. And that is where we really see or expect a lot of the growth to come from. And given that we're a member-focused organization, this bond offer is an opportunity for you to actually participate in our success. And that is one of the differentiating factor for VM is that we're member-focused, not from the standpoint of just offering the traditional financial services such as mortgages and savings, but also including you in our investment journey. And with that said, I'll now hand over to Dwight Jackson to get into more details of the offer.
Thank you very much, Romario. And I must say and echo the sentiments that you made about the comprehensive overview given today by the CEO. He took us on a journey, starting with our parent company, showing how well capitalized they are. Then he drilled down into VMIL, also showing our financial performance and how well capitalized we are. So I'm happy to now take you to the point of the meeting, essentially why we're here. As you're all aware, I mean, I'm sure you've seen the ads, you've seen the notices, whether it's on the digital billboards or those in the local papers, that we're floating a bond, that is VMI is floating a bond for approximately 5.4 billion. VM Wealth Management Limited, its subsidiary, is the sole broker and book runner that is arranger for the offer. This offer, as Rez noted in his presentation, VMI is a rated company. What does that mean? CariCris, which is our local or Caribbean rating agency, would have given VMI an investment grade credit rating, and that is on the screen. So in Jamaica, we are rated JMA minus, and so that shows you the quality of the credit that is on offer. We have 3 bonds pretty much up for offer, so investors can subscribe for one of 3. The first one is a tranche which is for 18 months. The interest rate on this is 9.75%. That's where it starts. However, for those investors that are subscribing for over 5 million, they can get an additional 75 bips on this offer. So again, starting at 9.75%, but you can get up to 10.5%. There's a 24-month bond, a 2-year bond, that starts at 10%. However, you can get up to 11% if you subscribe for more than 5 million. And finally, there's a 3-year bond where you can get at start 10.5% for the first 2 years. And if you invest over 5 million, you get 11.5% for the first 2 years. The third year of this bond is a variable rate bond. And the reason we've structured it as such is at some point, interest rate in the future will change. It may go up more than where it's at now, or it may go down. And for that reason, we factored that far into the future is unpredictable. And as such, we would have captured a structure that reflects the unlikely or the uncertainty of that far into the future in predicting where interest rates will be. Nevertheless, investors have an opportunity to earn very attractive rates. You can go into either of the tranches, so you can subscribe for the 18-month, you can subscribe for the 24-month or the 36-month, and you can do so on our Wealth IPO Edge platform, which Mr. Red Bursinson noted. To do this, you would go to wealthipo.myvmgroup.com to subscribe. You will see the prospectus there. We encourage everybody that has an interest in this offer to read the prospectus. If you have any questions, consult your broker, or you can reach out to any advisor at VM Wealth for information, or you can email us at wealthipo@myvmgroup.com. The proceeds of this raise is actually to refinance a bond that is maturing at this month. So we have a bond for approximately the same amount of 5.4 billion that matures at the end of December. Previously to now, as the host would have noted, we would have done these offers privately. So it means that the average Jamaican who is not an accredited investor or qualified as a minimum purchase investor per the FSC guidelines for what we call exempt distribution or private placement would not have had an opportunity to participate. But as the chair noted, we're a member-focused organization. So we want our members, but also you who are not yet a member but will become a member after this, to have an opportunity to participate in this very attractive offer. And so what better way to do that than to do an IPO of bonds to the public, where everybody that has $10,000 or more can subscribe for this offer. The offer opens actually tomorrow. However, given that the prospectus is already published, anybody who has an interest and has already read that prospectus and feels sufficiently satisfied about making the investment can actually go right now to wealthipo.myvmgroup.com and sign up for the offer. The minimum for participation, as I said, is 10,000, and we do blocks of 5,000. So if you want to go above that, it has to be in increments of 5,000, but you can go up to as much as you want or as much as you can afford at this point. The principal on this bond will be repaid at maturity. So what it means is that while this bond is still outstanding, investors will get paid interest, and that interest will be paid quarterly. The bond is repo eligible. This is an important feature for a lot of institutional clients that are looking for assets to put in their retail repo framework. So a lot of investors who are typically, on the safe or more conservative side that put their money with repo, what this is saying is that typically a bond like this is what is the underlying asset for your repo. So you can go ahead and just invest directly in this VMIL bond offer if you are that kind of a conservative investor. As the CEO would have demonstrated, we're part of a financial group that has been around for 146 years, dating back to 1878. We've been through it all. So not only have we been through COVID, we've been through the depressions, we've been through the financial crisis of 2008, we've been through FinSoc. You name it, we've been there and we've survived and we're thriving. And we invite persons who have an interest to come in, subscribe for this bond offer, have an opportunity to earn attractive interest rates, invest in yourself, if I may say so, this Christmas. So if you're getting bonuses or you're getting loanuses, whatever it is, this is an opportunity to invest in yourself, invest in a bond that provides you with attractive interest rate, gives you reliable and fixed payments so that you know when your cash flow is going to come in and what you plan to do with that, whether it is to gift yourself or to reinvest it back in some other security, be it a stock or some other type of security. So in a nutshell, the bond offer is $5.4 billion across 3 tranches. There's an 18-month, 24-month, and a 36-month tranche. 9.75% for the 18-month, 10% for the 24-month, and 10.5% starting for the 36-month for the first 2 years. Again, why would you want to invest? As I noted before, this is an investment-grade company. VMIL has been assigned an investment-grade credit rating by CARICRIS. We have a very strong credit profile. We showed you earlier that all our capital adequacy ratios as required to be tracked and measured by the Financial Services Commission are above benchmark, comfortably above those benchmarks. We have solid solvency ratios. Our financial performance for the year to date has been very, very robust. And we have, as I said, a very strong parent that has weathered all the storms that have come our way since 1878. We have a very strong corporate governance. Our board is very experienced, well-known, savvy businessmen, savvy bankers, savvy legal professionals that gives guidance to the management team upon which we've been executing and providing safety, convenience, return to our investors. Our liquidity position will be bolstered by this bond, as we have taken positions, as Rez noted, in private equity. We've taken position in other fixed income. We've taken position in public equity. And this is an opportunity for us to continue on that journey. And we anticipate that we will have a successful bond raise that will close. Importantly, I think I missed that opportunity to say that earlier, on the 27th. However, the possibility and the probability does exist that we will close earlier. As you can appreciate, we are in the middle of the festive seasons. Some persons will go off on vacation, and we want to plan around that. So if you are interested, please remember the close date is the 27th. However, we do reserve the right to close earlier, and we're hoping that that will be the case. As I mentioned before, part of this raise is to improve our liquidity position, and we believe that we are in a very robust position as far as liquidity is concerned, and this will just continue to aid in strengthening our balance sheet and improving our overall profile as far as liquidity is concerned. So again, just want to leave you here with this, that the offer opens tomorrow, closes on the 27th officially. Again, I want to reiterate, we do reserve the right to close early. We expect to list this bond. This bond will be listed on the Jamaica Stock Exchange. So investors that are shareholders in VMIL will also have an opportunity of subscribing this bond to trade it on the stock exchange across the market if they wish to exit. So the bond we expect to list on the 6th. The amount that we're seeking to raise is 5.4. The minimum subscription amount is 10. But as I said, for persons subscribing for $5 million or more, in any of the tranches, the 18, the 24, the 36 month, there's an added bonus in terms of a higher interest rate and offer. You may scan the QR code to get access to the prospectus, which we encourage every interested investor to read. And as I said, if you have any questions, please reach out to your broker or to any of our advisors to have those questions answered. Thank you again, and season's greetings, and I hand back over to our moderator.
Thank you for that, Dwight. That was a very informative presentation, very detailed. I think you did an excellent job in explaining the benefits of this offer. To the members of the investing public, I think you should consider this as our gift to you this Christmas, or investment gift to you. We're giving you an opportunity to generate wealth from a stable financial instrument, especially at a time when the equity market is not as consistent. As I mentioned before, we're also giving you an opportunity to participate in our growth story. And with that said, I will now venture into an ad that will give you some more details on how to apply for the bond IPO in terms of using the platform to make that application. And we'll come back and facilitate some Q&As. Welcome back to the VM Investments Limited investor briefing. For those of you online, this is how you will go about applying for the IPO. If you're using the World IPO Edge platform, you will just access our VM World IPO portal. It's a hands-on portal that allows you to access IPO-related information and apply as you see fit. In order to access this portal, you log on to worldipo.myvmgroup.com and select the option to apply. If you have not yet created an account, you will need to do so before proceeding. The instructions are pretty clear, and it's a very seamless way to apply for the transaction. However, if you're experiencing difficulties with the online portal, there is also the opportunity to apply using physical documents, and you can visit any of our physical locations in order to drop off those documents, sign up, and share those documents with our team of wealth advisors who are island-wide. With that said, we'll now show you another ad that gives you more details about how to apply. Hi guys, welcome back to the investor briefing. And you know what, VM Investments Limited, we're big on investor relations, so we wouldn't be able to complete this presentation without allowing you, the audience and the investors, to ask your questions. So we'll venture right into the Q&A session, and I'll allow Mr. Reswood Burchinson and Mr. Dwight Jackson to answer these questions to give you guys more comfort around investing in the transaction. So the first question comes from Josimar Scott, or Josimar Scott, hope I'm pronouncing the name correctly. And the question is, within the last year, VMIL has said that there's potential for build-out. Has said that there's potential for build-out of its private equity capabilities. How will the raising of this IPO help to do this? Will you focus on private equity separately from Jasmine? I believe that's a question for Rez.
I can give it to Mr. Jackson over there.
All right. Thank you, moderator and Josemar, for the question. So we've started on our journey in terms of private equity investments. As Mr. Burchinson would have outlined, we've already taken a number of positions in this regard. So currently we have private equity investment in companies like Home Choice and Coalbush Manufacturers, which is a chocolate manufacturing company. And Jasmine is also part of that private equity strategy. So effectively, we describe our private equity strategy to investors, or potential investors, such as yourself, as this. It's a three-pronged strategy. It focuses on opportunistic plays, meaning that companies that we take a private equity stake in with a more short-term view, with a plan for an exit within a 24 to 36-month period. Usually that exit is on the Jamaica Stock Exchange, or if another private equity firm that is more upstream in terms of their private equity investment strategy would come in and take us out. Then we have what we call our strategic private equity pillar, for want of another way of putting it, where we focus on companies that align with our mandate of being a one-stop, full-service financial partner or provider to our clients, our members, that we serve, or we've been serving for over 146 years. So that includes companies that are in the financial space, whether it's a company that currently does something similar to what we do, or a company that is doing something that we're not yet currently offering. Those are part of what we call or strategic private equity investments. And then JASMEF is a third pillar. JASMEF, as you would have known, or if you don't know, we apologize, and it means that we need more communication around that, is short for Jamaica Actor Small Medium Enterprise Fund. And that means that JASMEF itself focuses a lot on SMEs. And these SMEs effectively are companies that have been starved of capital, especially what we call patient capital, and need that capital to expand their operations or to take on investments that typically are way in front of the cash flows that they hope to deliver. So JASMEF is part of that PE strategy that we have. So again, it's a three-pronged or a three-pillar based strategy. One is strategic, one is opportunistic, and then JASMEF. So we've already begun on this journey. JASMEF is already an investment that we've made and committed to, and they have already made investment in the space. They have a number of deals in their pipeline that we're hoping that will come out of that pipeline very soon, and you will see more information around those investments that JASMEF is looking to make in Jamaican as well as Caribbean small and medium enterprises. We've taken position, as I said, in Home Choice as part of our PE. We have a number of other PE deals that we're looking at. Some are straight PE in terms of private equity, but some are also what we consider self-liquidating PE, meaning that kind of like in the form of bridge financing for companies that also want to go on the stock exchange. And you will see more information on that. We hope to see some of these companies also go on the stock exchange that we've taken position in the near future. And the strategic one, we've already done that. We had Caroline, which we sold, but that's also part of the strategy. So we're well on our journey with our PE, and some of the capital that we would have raised to date have been deployed in that, and that's why it's important that we refinance this bond to continue to maintain those positions. However, we've been on this journey, and at a future date, of course, we will continue to make more announcements in terms of our efforts in this particular area.
Thank you for that response, Dwight. I hope that answers Jose Mari's question. The next question on our screen is coming from Maz at Control. So that's just a username. So the question is, will your bonds have a fixed rate interest for 2, 3, 5 years? How will that work?
Okay, so I'll take that one from Mario. So we don't have a 5-year bond, but we have an 18-month bond, a 2-year bond, and a 3-year bond. The 18-month bond, the interest rate is fixed. So if you are subscribing for $10,000 Jamaican dollars or less than 5 million, the interest rate that you will be paid for this bond for 12 months or per annum is 9.75%. So that will be fixed. Similarly, we have a 2-year bond, that's a 24-month bond, that will also pay a fixed interest rate of 10% if you are subscribing for 10,000 or more, but less than 5 million. And we have a 3-year bond. This is where it gets interesting, Maz at Control, because in the 3-year bond, for the first 2 years, the interest rate is fixed. If you are subscribing for 10,000 but less than 5 million, the interest rate will be fixed at 10.5%, right? However, if you are in this bond beyond the first 2 years, because you have the option to trade it, in the 3rd year, the interest rate will be variable. And the interest rate will be variable based on the underlying interest rate, which will be based on what we call the treasury bill rate. So if you notice, or if you have read the prospectus, you would see something that says the weighted average treasury bill yield. That's the 6-month treasury bill yield that we're speaking to, or the 180-day treasury bill yield. I think the last time I checked before I came here, that rate currently is 6.17%, and we add a margin above that of 2.5%. So assuming that is now, you would add 2.5% to 6.1, and that would take you to effectively 8.6%. So that's how the interest rate will be calculated in the 3rd year for the 3-year bond. So just to repeat, we have an 18-month bond where the rate is fixed for 9.75% if you're subscribing for less than 5 million. We have a 24-month bond where the interest rate is 10%, where if you're subscribing again for less than 5 million, you'll be paid 10% fixed. And then you have a 3-year bond where if you're subscribing for less than 5 million, the rate will be fixed for 10.5% for the first 2 years, and in the third year, it will be variable, and the variable rate will be set based on what the treasury bill rate for 6 months is in the market.
Thank you for that, Dwight. So the next question is from Patrick Brooks. And his question is, please explain why capital adequacy and capital leverage are equal this year, while adequacy was greater in the previous year. So the question is, please explain why capital adequacy and capital leverage are equal this year, while adequacy was greater in the previous year. I'll hand over that question to Rez.
Sure, let me try and find the slide. Let's take another question and I'll come back to that one if you don't mind.
All right, so Patrick will answer your question in the interim. I'll take Tony Simpson's question. So are these percentages before or after tax? What is the tax? I think this question needs to be a bit more specific.
Well, I imagine, Romari, that this question is the interest rate related, and if so, that's how my response should be interpreted.
Okay.
So I'm assuming that the question is, are the interest rates that we're showing, or what I would have alluded to, before or after tax? So if that's the case, the answer is they are before tax. So these are what we call gross rates. The after-tax rates would be different. The tax on investment, fixed income investment like this in Jamaica is 25%. So an investor investing in the 2-year bond, for simple maths, 25% of that would be 2.5%. So you're getting net 7.5%. However, if you're not a Jamaican investor, these taxes would not apply to you. So if you have a broker that is an overseas broker, etc., those taxes would not be applying to you. But if you're a Jamaican investor using a Jamaican broker, taxes on the notes will be 25% or 0.25.
Thank you for that, Dwight. How often is interest paid?
So typically for bonds, interests are paid semi-annually. In Jamaica, we have a practice of making that payment quarterly. And in true fashion, we've understood the need for those cash flows to help with different bills. People, depending on the investment amount, use the cash flows in terms of interest payment to pay school fees. Some may use them to shop for back to school. Some may use them to help with other investment like buy stocks, etc. People use cash flows from fixed income investment for a myriad of things. For this particular offer, the interest rate will be paid quarterly. So it will be paid March, June, September, and December.
All right, thank you, Dwight. So in a nutshell, interests are paid quarterly. This question comes from Caffrey Davis. As someone new to the investing world, with the offers presented from VM here, what are the essential know-hows of the IPOs offered, and what benefits are there to this potential IPO? So this question, I believe Dwight alluded to it before, but I'll allow him to re-emphasize.
Okay. So this is an opportunity, Caffrey, that is what we call fixed income. So typically, for the most part, the IPOs that would have been done in Jamaica are share-based, or you're buying a stock in a company. When you buy a stock in a company, there are two ways you typically earn. You earn from an appreciation in the value of that stock, or if that stock pays dividend. Fixed income securities work almost, I don't want to say the opposite, but it's dissimilar in the sense that for the most part, how you earn on fixed income securities are based on the interest rates that are paid. So what we encourage investors to do in terms of a know-how is, what are your plans for your money? That's one of the most important know-how. If you are looking to invest, what are you expecting to get out of this investment and when? So timing is important and the use of your money is important. So that know-how is something that you want to know. As I said, these bonds that we're offering are 18 months, 24 months, and 36 months. So they are pretty short in the grand scheme of things. And so somebody, for example, that is putting together a deposit to buy a house in the next 2-3 years, this is a good opportunity to start to, put that deposit together. Somebody looking to say, right now the equity market is down and they want to continue to earn attractive interest rates, especially given that interest rates are expected to decline over the next, say, 6 to 24 months, then this is also a great opportunity to lock in attractive interest rates on your security with the hope that if the stock market rebounds in the next 12, 24, even 36 months, you would be exiting this investment and you can plow that money in the stock market. So the know-how is, what do you want for yourself in terms of, looking to invest? Do you want safety? Are you the type of person that is a low risk profile? Do you want to make sure that you're getting back your money in 18, 24, or 36 months? What are you going to use your money to do in that time period? Is that important know-how? And again, what is your risk appetite? Are you the type of person that is more conservative? Stocks are usually higher risk than bonds. And so from that perspective, it probably is more important that you invest in bond rather than stock if you're more conservative from that perspective. So those are 3 know-hows I would share. There are certainly a lot more, but as I said, it's important to read the prospectus, understand what VMIL is about, understand the parent company that backs us and supports us, understand what this bond offer is meant to achieve for us, and how the company is capitalized, because our capitalization is how we believe you can appreciate the risk in the transaction and feel comfortable that you're making a good investment.
All right, thank you, Dwight. I hope that answers the question. And now we'll go back to the original question from Patrick Brooks. So I'll read the question again, and then I'll allow Rez to explain. So please explain why capital adequacy and capital leverage are equal this year, 19%, while adequacy was greater in previous years.
Okay, so I think if I understand the components of the 2 ratios, what I would say that the drivers would be capital. The major change that took place at the end of last year was that VM Wealth Management had an offer for $1.5 billion. That certainly increased the capitalization in VM Wealth Management. In addition to that, we are also, last year, another driver of us was to reduce the size of the balance sheet in wealth management as we sought to de-emphasize the repo portfolio. So those 2 things are the drivers as to why the ratios change. But overall, we are still very confident that we are surpassing the regulatory ratios. So that's a very positive thing for the business.
All right, thank you for that, Rez. The next question is from Dame Sky. Given the recent sensitivity to interest rate changes, this could benefit net interest margin by lowering finance costs. Could this issue support future net interest margin growth? And do you have targets for expanding your net interest margin?
Okay. So when you look at the current structure of this offer vis-a-vis what is being refinanced, there's certainly a reduction in the overall interest rate structure by, I think, 50 basis points. I think, as Dwight would have alluded in the presentation, is that the objective of the refinancing is not necessarily to reduce NIM, but to redeploy the capital into PE opportunities and other such opportunities. I did make the point when I was going through the revenue structure of VM Wealth Management that we are seeking to have a very balanced portfolio in terms of revenue composition, in terms of NIM, asset management, capital markets, and trading. And we have said that the key driver of business is going to be asset management and obviously the PE business. So it's not a NIM play at the moment. It's more focus to grow the return on equity for the overall business.
Thank you for that, Rez. So next question. But just to add to that, it also gives us more financial flexibility. So not a NIM play, but it definitely gives us more financial flexibility based on this structure. It lengthens the maturity profile, which allows us to take advantage of more investment opportunities, as well as the interest rate environment.
Sure.
Next question, is the principal amount guaranteed? Simon.
Yeah. So Simon, this is not a principal guaranteed note. Actually, there are notes or bonds that are structured as such, where there are guarantees, meaning that effort would have gone into making sure that despite whatever happened, I mean, unless there is an end of earth activity, you would get back your money. However, we went through at length the history of the financial group that VMI is a part of to show you that we have stood the test of time, and pretty much most of what may be thrown at us in terms of financial crises, and we've withstood those, we've come through those, and we've remained unscathed. And so this is, while this is not a principal guaranteed note, you are putting your faith, if you are to invest in a company that has for 18 months up to 3 years, because as you can appreciate, or I'm hoping that there's an appreciation of the time period it takes to put a prospectus together, getting it approved or getting the no objection from the FSC, the Companies Office of Jamaica and the JSC, that especially in the market that we've been in for the last couple of years since COVID, and the Bank of Jamaica having taken significant steps in terms of hiking interest rates to fight inflation, we're still pretty much in an elevated interest rate environment. And there are competing offers in the space. However, we believe that over the next couple of years, interest rates will fall off. We see inflation already in the target range and closer to the lower end. I think the point-to-point inflation based on the last update from starting is 4.3%. Inflation rate, the target inflation range is 4 to 6%, so we're pretty much close to that. So imagine that right now the central bank is thinking that they will need to lower rate if they want inflation to remain in that target rate. And why is that important that it remains in the target rate? Because you also want growth. You cannot have growth without inflation. And so it's important that inflation remains positive and in that target range. So we're expecting that the central bank will be lowering rates. And so over the next 24 to 36 months, rates could fall more. And at that time, we expect to go to market and look at refinancing these bonds, paying out some of it as well. And if we do refinance any of these bonds, then we expect to probably look at longer tenures, as interest rates we expect to be closer to their floor during that period of time, all being well or all being equal, as we'd say in econ.
Thanks for that, Dwight. And the final question is, can you kindly explain the term unsecured corporate bond? This is from Janice Shaw.
Okay. So I will explain this, Janice, by telling you what a secured is. So typically a secured bond is a bond that has a charge, or what we call a mortgage over a property, for example, which means that if the issuer of the bond or the borrower defaults on their obligation, whether it's interest and or principal, the holder or the owner of that bond, which could be yourself or any other investor, will be able to get back their money by having the property disposed of, and the money is recouped from the sale of the property that is securing the bond would be used to pay out an investor like yourself if you invest in a secured bond. When the bond is unsecured, it means that there is no collateral, there's no real estate, there is no motor vehicle, there is no tangible collateral or even intangible collateral that is of value that is backing that bond. However, a financial institution like VM, and if you were to do any research based on what I'm saying, just to fact check me, financial institutions typically don't issue secured bonds. Just like what we're saying is when you put your deposits with us, we give you our word based on our capitalization that when you want that deposit, you will be able to get it back, and you're typically able to get it back. And as I said, we went at length through the presentation to show our history of being about for 146 years, to say we've stood the test of time. And even though this bond is unsecured, meaning that there is no hard asset, there's no real estate backing it, VMIL and the VM Group does own a lot of real estate. We do own a lot of assets. So in any event that we should run into any difficulty, we can sell those assets. However, we are so well capitalized that we don't imagine that we would have the need to do that. But anything can happen in a worst case scenario. We're not predicting that one will happen. But the company that is issuing these bonds, which is VMIL, is well capitalized. It has a lot of assets. You can fact check that by looking at our financials. All of this is in the prospectus for you to digest. So you have no need to worry that it's not secured based on my explanation of what a secured bond is versus what an unsecured bond is.
Thank you, Dwight. I'm sure that answers the question and goes into even more detail. With that said, as I said before, we are still taking questions. The presentation will be on the YouTube channel, so feel free to share those questions there and we will definitely respond. I want to thank everyone again for tuning into this investor briefing, and just to remind you that you can access the portal in order to apply. In order to apply online, please access our portal, and you can access this portal at wealthipo.myvmgroup.com. If you need information, you can also email wealthinfo@myvmgroup.com or call 960-5000. With that said, I'm going to invite our CEO, Resvert Berchinson, to close out today's briefings.
All right, thanks, Mario. I guess I'm closing the show. Just a few closing points. First of all, let me thank everyone for taking the time to listen to this investor briefing. I want to thank the entire marketing team of the group and my management team for organizing the same. However, we have an objective for this bond offer, which we certainly articulated. So the offer is a very attractive offer in terms of the interest rate and structure and also the time to maturity. It says 18 months based on your maturity profile up to 36 months. So very attractive opportunity. Second thing is that it's very convenient to apply. There's no need to come to the office, as Omar would have said. You can apply on the portal, and from very, very convenient. The final thing, I kind of mentioned it, is that we're on this journey to empower Jamaicans to be financially independent. And we know that the best time to start to think about financial independence, etc., is when person start to get the bonuses, etc. So I think you want to, this Christmas, to say, hey, how do I commit some dollars towards accelerating the journey of myself and my family towards financial independence? The offer is very attractive. It's very convenient. We ask all Jamaicans to take a look at the offer because now is the time to say, how do I ensure that I start 2025 with a robust plan towards financial independence? When you sit and look at your assets, whether it be a stock portfolio, real estate portfolio, your savings fund, you certainly want the VMIL bond to be a part of your portfolio composition, and certainly we encourage you to come with us on that journey. Certainly we're looking forward to your support. So thank you very much.